We're in for serious trouble. Are you prepared for it? How do you prepare for it? And how do we get through? How do you get through what's about to happen? Because it's one thing to crash, but can you survive it? I want you to know 25 years ago, what Richard was saying was blasphemous. It was treasonous. And the problem is it's true today. And so his books were prophetic. Problem with most people is they're stuck in microeconomy. They don't see the big picture. I would estimate 90% of Americans just believe that don't worry, America will bounce back. Everything will be happy days are here again. And as a U.S. Marine, called the people who are stuck in the microeconomy, they got their heads up their asses. They can't even see what's happening. I talked to many real estate agents here in Arizona and said, don't worry, interest rates are going up and all this stuff, but don't worry, Arizona is hot. That's true because the people are migrating out of California, Chicago, New York, and now Florida, they're moving here, So Arizona is good. So on the micro scale, these real estate agents are accurate. They're going, I don't have to worry, man. I live in Arizona. So that's having your head up your ass as far as I'm concerned because you can't see the macro. And when you look at the macro, the whole world is collapsing around it. It's going to be good for Arizona, maybe because people will move here and all this stuff. Let's say that China whacks Taiwan. Well, that's good for me in Hawaii because all those Taiwanese will move to either California, Arizona, or Hawaii. So that's micro and macro. So let me give the definition of micro is you got your head up your ass. You better stand around and take a look at what's going on. So it's our dear friend, years and years and years and years ago, Richard has been to our events and he's taught, and people always get blown away because they find out how micro they are. You've been calling this for a long time. The dollar is in crisis, isn't it?
Well, so our economic system is in crisis. I'm really worried now that we're on the verge of a serious economic crisis that could see the destruction of trillions of dollars of additional wealth.
Give me a break. Are we corrupt or what?
So capitalism, in my view, became corrupted at the fundamental level when we stopped backing dollars with gold. To make a long story, not too complicated a story, but to make a long story short, this unleashed an explosion of credit. Credit absolutely exploded. Total credit or total debt in the United States grew from $1 trillion when I was 3 years old in 1964 to $91 trillion now. From $1 to $91 trillion in my lifetime. During that process, that created a great deal of wealth, a great deal of economic growth in the United States and all around the world. But our economy became addicted to credit growth. Economy must have credit growth to stay out of crisis. And now credit is contracting when you adjust it for inflation. So this is a very serious problem for economic system, which I call creditism rather than capitalism, since it's driven by credit growth.
I want you to pull your head out of your butt and take a look at the world, because Richard sits in Thailand. He's an American. He sits out there and he can see the world, but Americans can't see past their house. Micro is this. You're standing you're pumping gas into your leased SUV and you're going, why is the price of oil going up? That's micro. I mean, they can't see it. But inflation, I'm afraid, is systemic now. A lot of it is because what Richard's talking about is creditism. They just print so much money. Instead of solving the problems, they print money. And now it's going to backfire on everybody. Richard, there's a lot of things I want to talk to you about. One is the Nord Stream 2, they torpedoed the pipeline. You have the war in the Ukraine. The English pound crashed. Japan's yen is in serious trouble. And I guess North Korea fired some rocket at the Japanese. You have inflation being systemic. And you have the BRICS, BRICS. Brazil, Russia, India, China, South Africa. I mean, nothing macro here. You want to take anyone on? What happened to the English pound? Because that's the gilts and all that other stuff. Gilts is a government bond or something like that from England.
That was the second blow we've experienced in the last 2 weeks. What happened there was new English Prime Minister and her finance minister announced very large tax cuts, very, very large tax cuts, with a lot of this going to the wealthy people, the wealthiest parts of society. And that meant that the UK government was going to have to borrow a great deal of additional money just at the time when the Bank of England, which had been buying government bonds through its quantitative easing program, it was planning to start selling government bonds. Suddenly, England looked like a third world country. Interest rates on its government bonds doubled in about a 2-week period. They went from 2% on a 10-year government bond yield to 4%. Normally, that would make the currency appreciate, but the English pound started dropping like a rock. It fell from 1.15 to the dollar on Monday last week By Friday morning, it was 112. By Friday afternoon, it was 109. And on Monday morning, it dropped to 103, the lowest in history. Huge swings in the currency, and more importantly, in the interest rates on the government bonds, was so violent and so unprecedented that the UK pension funds thought that they had cleverly hedged their positions with these derivatives contracts known as liability-driven investments. But the moves were so large that the people they had these derivative positions, hedging positions with, started calling in their margins. And they couldn't put up their margins. So they got sold out of these hedging positions. And it looked like the entire UK pension system, the various pension funds, were on the brink of going bankrupt.
Collapse.
And so the Bank of England had to jump in. At the beginning of the week, they intended to start reversing quantitative easing. They were going to do quantitative tightening. But by the end of the week, they reversed course and announced that they were going to do even more quantitative easing. They said they'd buy 65 billion pounds of additional government bonds over the next month or so. And that has restored calm temporarily. And in fact, it's injected a bit of euphoria in all the markets yesterday and today. The markets and the investors hope.
The point here is this, what does it mean to the English people? Their pensions were about to collapse. And the Bank of England is the Fed, the same as our Fed. So what does that mean? So when they start printing more money, what does that mean? Inflation, or are they trying to avoid a depression? What were they doing?
Well, the first move is to try to avoid a depression. That was what they had to do first. They had to act as a lender of last resort. No one else would provide money to support the financial system in England. And so the Bank of England said, we'll do it. We'll create a bunch of money and we'll restore order.
That's been the problem since about 1998 when LTCM, long-term capital management, crashed, and the Fed had to bail out a hedge fund. And Jim Rickards is a friend of ours who wrote the book Currency Wars and all that. His question was back then, who bails out the Fed? And I think we're kind of there now. I mean, that's what you've been writing about in Dollar Crisis and the Corruption of Capitalism. Who's going to bail out the Bank of England? And who's going to bail out the Fed and all the Bank of Japan and all these central banks?
Well, the central banks have had it very easy for the last 3.5 decades because globalization was extremely deflationary. It was pushing down prices and the inflation rate was very low. So interest rates were very low. So they could get away with printing a whole lot of money without causing high rates of inflation. Right. And by printing a lot of money, they would buy government bonds and that would finance government spending and let the government spend a lot of money and stimulate the economy that way. So this was a Goldilocks for 3.5 decades. But suddenly now globalization is going at least partially into reverse. Yep. First, we had COVID and the supply chain bottlenecks all around the world. Next thing you know, Russia's invaded Ukraine, pushing up energy prices, oil prices, gas prices, wheat prices, corn prices, another big round of inflation. And suddenly the central banks are in shock because for the first time in 35 years, they have to deal with inflation. And inflation in the UK is at 10%. It's 10% in Germany, and practically 10% in the United States. And so now, if they try to support the economy by printing more money, that's going to just fan the inflationary flames. But if they don't print more money, then credit's going to contract and the economy is going to spiral into crisis.
The English people still have no idea. Most Americans have no idea what happened, and they actually believe the Fed can save them. But as my friend Jim Rickards says, who's going to bail out the Fed? Who's going to bail out the Bank of England? The central bank system is under crisis also right now, and that's what Richard was alluding to 20-something years ago. And so the question is next is what's happening in China? I mean, they have the biggest bubble in real estate ever, right?
Absolutely, and well beyond real estate. They have excess capacity of everything on a mammoth scale. I once was told by a Chinese professor that in his town, the city government had built 2 beautiful big new bridges. The only thing is they hadn't built the river yet.
What's going to happen with the Japanese yen, and why is North Korea firing rockets at them?
So I can't talk about what North Korea is doing, but I can say something about what's happening with the yen. The Bank of Japan, the Japanese central bank, is determined to keep their interest rates at a very low level, even though interest rates in the United States and everywhere else, most other countries are going up very rapidly. And so if the U.S. interest rates are 3.5%. Japanese interest rates are only 1/4 of 1%. And the Bank of Japan plans to keep them there. And they can do that. But that means no one's going to want to hold yen because you can't earn any money on if the interest rate's 25 basis points. They want to sell their yen and buy dollars. And because the dollar, you can get 3.5% interest. That means the Japanese yen is falling. It's at a 20-year low. And unless the Bank of Japan changes its policy, it looks like it's going to keep falling.
And this is the thing, I'm fourth generation Japanese American, and I always laugh about it because the Japanese per capita have the highest savings rate of all, demographically, the highest savings rate of any population. And that's why the Japanese aren't the smartest. Why would you save money when the governments are printing it? So that's why in Rich Dad Poor Dad I put savers or losers. And now American savers are getting their butts handed to them because they're going to print even more. So the other thing too then is, what do you think about the BRICS? Brazil, Russia, India, China, South Africa. See, Americans can't see the BRICS. It's out of their picture. Brazil, Russia, India, China, South Africa, and the Belt and Road Project or the Silk Road Project. What do you think those guys are up to against the dollar?
So they used to all be very strong and moving together so they could be grouped together under this heading of the BRICS. But now they're all moving in different directions for different reasons. Russia's economy is in serious trouble because of its ill-advised invasion of Ukraine, and it's not doing very well. And they've got lots of sanctions imposed on them. They can't import any high-tech semiconductors, for instance, so they're going to run out of weapons. So their economy is in crisis. And of course, as you know, I believe that 20 years from now, oil's not going to have any value whatsoever. And their economy is entirely fueled by their earnings from oil and gas. So they're looking at a very dire future, in my opinion. China, they have the biggest bubble in history, probably, but since they have a totalitarian government that can make the banks continue lending, continuing to invest, their bubble will probably not collapse into any kind of Great Depression, but it is not at all inconceivable that they'll just stop growing the way Japan stopped growing 20 years ago. And that'll be a huge change for the world because China's growth has driven the global economy since 2008 when the U.S. stopped playing that role. So no growth in China is a very big deal. India has better prospects because it's a little more friendly with the United States. And a lot of companies now realize that they'd probably better move their factories out of China, which the United States is becoming increasingly hostile toward, and move it somewhere safer with a lot of low-cost labor like India. So India prospects are the best among the BRICS, in my opinion.
Let me give one more point out there. For all you guys who are working from home right now, job replacement lives in India today. Because if you can come in via the computer and you don't need to go to the office because you don't want to go to the office like many workers don't, guys like me are going to say, well, why don't I just hire somebody in India? Because that's what technology is doing. Most people, and I see it every day, micro means that you got your head up your butt. You can't see anything outside of your neighborhood or your gas pump. People cannot see it because it's out of sight. What's about to happen or what is happening today is good news. But if you're not prepared, you're going to get your butt handed to you. Like it or not. I'm a Marine pilot. I went down 3 times. And the question is not if you're going to crash. The question is, will you survive the crash? And that's what I love about the Marine Corps. We practice crashing every single day. And so when the 3 times it happened in Vietnam, we survived. I'm making more money hand over fist, but unfortunately the rest of the world's going broke. Like I went to school, my background is oil. I drive oil tankers for Standard Oil. And so today I own oil wells. I don't own oil stocks. When Biden cut off the the Keystone XL pipeline in 2000, the first act he did was the act of sabotage, what Biden did, in my opinion. I was selling oil at $30 a barrel. Immediately when he cut that off, it went to $130 a barrel. Meanwhile, the middle class and poor got poorer, and guys like me got richer. And that's what I mean about Rich Dad's prophecy. If you prepare, you'll come out okay. But you got your micro watch and you got your head up your butt thinking, oh, the Fed's going to save me. America's the greatest. I don't have to worry. I got a pension. I got a 401k. I'll take laps around the rosary beads tonight. The Keystone XL pipeline, which ran from Canada to America. Recently, the Nord Stream 2, the pipeline running out of Russia, was torpedoed, was bombed, and it's in 200 feet of water. I mean, the charge to blow that thing up. God, yeah, I'm a Marine. I fought and all this stuff, but I wouldn't know how to blow up a pipeline. You know what I mean? That is really, really big. But the question is, what does it mean? Cell pipeline in America, which is an act of terrorism and treason, in my opinion, and then the Nord Stream 2 pipeline gets demolished intentionally. And it's Russia's major source of income is exporting power.
It's about who did it. So this is purely speculation on my part. But if I had to guess, I believe that Russia blew them up. It was not just Nord Stream 2, which hasn't begun operating yet. It was also Nord Stream 1. Both of them got blown up at the same day, nearly the same time. So Nord Stream 2 hadn't started pumping any gas yet, but Nord Stream 1 had been pumping gas for a very long time until recently. Putin stopped all the gas going through Nord Stream 1. So there was no gas going to Europe from Russia through Nord Stream 1 or Nord Stream 2. The day before that a new pipeline opened between Norway and Germany that's going to supply a great deal of gas from Norway to Europe this winter. And I believe that by blowing up these pipelines, which were doing Russia no good anyway because they weren't pumping any gas anymore, he was sending a signal that he could blow up the Norwegian pipeline to Germany as well. And if he did that, then it will be a very cold winter for the Europeans, and they won't be able to run their factories. And so their economy will have a very severe crisis. So that seems to be the message he was sending. Of course, he's also threatening to use nuclear weapons, which is the most frightening statements I've seen coming out of any world leader since I was a child.
Like Stalin and Hitler and Mao and all those guys rise out of hyperinflation and things like this. If China's in trouble and, Russia hit Ukraine, from an American's point of view, sitting in Thailand, what are the odds of China going after Taiwan?
It probably won't happen. It would lead to a war between the United States and China. And at the very least, it would result in an economic calamity in China. China's trade surplus with the United States, the amount of goods China sells to the U.S. over and above the amount the U.S. sells to China, is more than $1 billion every day, more than $400 billion a year, overnight, and never to recover if they invade Taiwan. So that's a very big incentive for them not to do it, because unemployment would go up. It would cause social instability. They'd also end up having some of their cities wrecked, and the Communist Party might be overthrown. So that's probably the biggest reason they're not going to do it this decade.
He has to stop inflation because inflation is now systemic. It means it's now going to keep going. And the more inflation runs, it's like the person standing at the pump with the gas, pumping gas into their leased SUV, worried about their job and the price of oil's going up. They're micro. They cannot see past their butt. Can Jay Powell, the head of the U.S. Fed, can he stop inflation?
And all hell broke out 2 weeks ago when Powell put out the Fed's new projections for how high they would increase interest rates. In June, they said that interest rates would be 3.4% at the end of this year. 3 months later, in September, 2 weeks ago, they said they're going to be not 3.4%, but 4.4%. And by the end of next year, he said they'll be 4.6%. So this was a radical adjustment upward in their projections for how high they're going to increase interest rates just over the next few months. And afterwards, that caused a big sell-off in the stock market. The dollar got a lot stronger. That caused problems for the UK pound. And all hell broke loose in the financial markets. And on top of that, not only are they hiking interest rates, but at the same time, they're reversing quantitative easing. Instead of creating money, they're now destroying $95 billion every month.
This is the U.S. Fed. This is the U.S. Fed's doing this.
That's right. The Fed is destroying $95 billion a month. Multiply that times 12 months, and that's going to be $1.1 trillion that don't exist 1 year from now that exist today. That's about 13% of all the dollars. As long as the Fed is carrying out quantitative tightening or destroying dollars like that, it's very likely that asset prices are going to keep falling. because all of the asset prices are floating on this ocean of liquidity that the Fed is now draining. So it's like a bathtub. The bathtub is being drained of water and all the asset prices are going down. It's not going to stop until the Fed stops.
So let me explain what that means to Mrs. Micro. That means that their real estate is going to come down because there's fewer buyers. I was at a major bank yesterday. The bank was empty. You know why it was empty? Because they don't need loan officers. The biggest layoffs are coming in the banks right now because banks cannot loan money because people cannot afford to borrow. That was just yesterday.